Good day, everyone. We are the group Matanic, and for today's video is we're going to discuss a new lesson. But before that, I'm going to introduce to you my group mates. So let's go. My group mates are Mark Kenneth Quinto, Domingo Vigy Barra Jr., and that is me, and John David Raet, Carol Joy Pantanosas, Ana Maricueco, and lastly, Roslyn Escares. So before we proceed to our discussion, may we have a prayer first? So let us pray. So Lord, thank you for this day na binigay niyo po sa amin na ikaw po ang siyang magbigay ng knowledge and wisdom upang mai-deliver po namin ang lahat ng aming dapat sabihin po sa ituturo po namin, and bigyan nyo rin po ng knowledge and wisdom ang mga makikinig po upang ma-receive po nila ito ng maayos and may matutunan po sila. Ito lamang po, itinataas ka po namin sa pangalan ni Jesus. Amen. So, that's it. And let's proceed to our icebreaker, which is entitled Let's Play, and it is our instruction. Fill in the crossword puzzle with the correct terms using the sentences below. Match the number of the sentence to the boxes placed across or down the grid. Next. So for our across, number 4, it is the longest holiday of a person lived. Number 5, an insurance covers your vehicles against incidents, damage, theft, and etc. For our down, number 1, it has to be paid over 1 year for life insurance and to be paid lump sum for general insurance. Number 2, it is the pure insurance form. Number 3, an arrangement by which a company provides a guarantee of compensation for specified loss, damage, illness, and death. So ipapasa nyo po ito after our discussion. So pass it on Mark Kenneth Quinto. And kung sino raw yung makakaunang magpasa is may GCash daw para sa kanya, worth 50 pesos GCash. So for our learning objectives, after the discussion, the students must be or would be able to understand what is insurance, describe the basic types of insurance, principle of insurances, and determine the difference between life insurance and general insurance and likely use cases, and establishing the significance of insurance and how insurance take the risk for financial loss. So before we proceed sa kung ano yung nakikita sa picture, maybe meron na kayong naisip kung ano yung magiging topic natin for today. So let's start our discussion. So our topic for today is insurance. So ano nga ba ang insurance? So insurance is an arrangement by which a company or the state undertakes to provide a guarantee of compensation for a specified loss, damage, illness, or death in return for payment of a specified premium. So kapag sinabi natin insurance, ito yung may mga binabayaran tayo, for example, for like UK, St. Peter. So ito yung mga nagagamit natin sa, kunwari, magpapatayo tayo ng bahay, bibili ng kotse, and para sa mga health natin or sa hospital bills, ito yung ginagamit natin para malesen yung babayaran natin. Insurance mathematics is the area of applied mathematics that studies different risks to individuals, property, and businesses and ways to manage this risk. Insurance mathematics relies heavily on calculus, probability, statistics, and interest theory. So there are different insurance policy components, and we have 3 policies. The first one is premium. So what is premium? So premium is typically expressed as a monthly cost. The premium is determined by the insurer based on your business risk profile, which may include creditworthiness. So kapag sinabi nating premium, ito yung for example, ang example nito is, kunwari, if your car insurance premium is $800 per year, so you must pay your insurer $800 per year to have the insurance. So meaning to say, kung magkano yung napag-usapan nyo ng insurer mo, yun dapat yung mahuhulugan mo, not just, hindi lang siya monthly, meron rin per year ang sa premium. So, dapat at the end of your contract or at the end of yung napag-usapan nyo, dapat mabayaran mo yung amount of money na sinabi dun sa policy na yon. So, another example is, if you own several expensive automobiles and have a history of reckless driving, you will likely pay more for an auto policy than someone with a single mid-range sedan and a perfect driving record. So ito pa, isa pa tong example na to, which is kapag mas marami kang damage na or marami kang nagagamit sa insurance mo, may possibility na mas malaki yung babayaran mo kaysa sa iba. Another policy components is policy limit. When we say policy limit, it is the maximum amount an insurer will pay under a policy for a covered loss. Maximums may be set per period. Example is for annual or policy term, per loss or injury, or over the life of the policy, also known as the lifetime maximum. So kapag sinabi nating policy limit, ang example nito is, for example ulit, is you have a car insurance policy. So, ang napag-usapan nyo rito is, ng insurer mo is meron kang $1 million para sa insurance mo. So, ibig sabihin, kapag nagkaroon ka ng possible na mga accidents or whatsoever na about sa car policy na yon, ang kaya lang magastos ng insurer sa'yo is 1 million. Kapag lumampas yon, may possibility mawala na yung insurance mo. And the last policy components is deductibles. When we say deductibles, it is the amount of money that you are responsible for paying toward an insured loss. When a disaster strikes your home or you have a car accident, the deductible is subtracted or deducted from what your insurance pays toward a claim. So there are two kinds of deductibles, wherein it is in car insurance deductible only. So ang unang type ng deductibles natin sa car insurance is collision deductible. So dito, it covers the cost of repairs to a vehicle in case of a collision unless you are deemed to fault for the accident. So kapag sinabi nating collision deductible, ito yung kapag magbibigay sila ng insurance sa'yo sa mga kapag na-aksidente ka or nabangga ka, mga ganon, hindi lang, mas malaki yung babayaran mo rito sa collision. Hindi katulad ng yung isang type niya, which is the comprehensive deductible, na reserved for necessary repair work that is not related to collision. So ito namang kind of deductibles is binabawas siya, for example, is sa mga, kunwari meron kang ipapacheck mo yung cars mo, yung parang free check-up per month ng cars mo, ganon. So another example is, if your car insurance has a $100 deductible on collision and you have collision damage of $500, you will have to pay the $100 of the damage and the insurer covers the remaining $400. So meaning to say, ang deductibles is hindi inaako ng insurer lahat ng bayarin mo when it comes sa accidents or whatsoever. May times na may babayaran ka rin na part, tapos parang hahatian ka lang ng insurer mo. So, and that's all. So for our next reporter, Miss Carol.
Okay, thank you, Jay. Okay, let's proceed to the types of insurance. First is principle of utmost good faith. The insurance contract must be signed by both parties in an absolute good faith or belief or trust. Example dito is yung company kailangan mag-release ng kontrata para sa aplikante na bibigyan ng insurance na para ma-insured yung ano niya, tawag dyan, yung life insurance niya. The next is principle of insurable interest. It states that the person getting insured must have insurable interest in the object of insurance. For example is insurance for your child. Parang maghuhulog ka ng insurance para ma-insure yung kinabukasan ng mga anak mo kung sakaling ma-dead ka. Then next principle is principle of indemnity. An insurance contract is signed only for getting protection against unpredicted financial losses due to future uncertainties. Example of principle of indemnity is when an insurance company as part of individual insurance policy agree to indemnity to incur the result of accident or property damage. Gaya nga ng sinabi kanina ni Jay sa ano ba yun? Yung last na topic na nabanggit niya is kaya hindi aangkinin ng company lahat para bayaran yung mga damage or halimbawa nagkaroon ng ano ba tawag? Nagkaroon ng fire, ng sunog, tapos nagkaroon ng damage. Hahatiin lang ng insurance yung ibabayad niya sa'yo. Then, another principle is principle of contribution. It applies to all contracts of indemnity. An insured has taken out more than one policy on the same subject matter. The insured can claim the composition only the extent of actual loss either from all insurers or from any one insurer. If one insurer pays full compensation, then that insurer can claim protection proportionate claim from other insurers. For example is example dyan is if the owner bought $250 policies on his home from different companies and the fire occurred that was covered under both policies, the owner files a claim with company. That company will pay out the $250,000 to the owner. Another principle is principle of subrogation. Principle of subrogation is the insured is compensated for the losses due to damage to his insured property. Then the ownership right of such property shifts to insurer. Principle of loss minimization. The insured must always try his level best to minimize the loss of his insured property in case of uncertain events like a fire outbreak or blast, etc. Okay, example dito is yung fidelity guarantee. Fidelity guarantee if the client's business requires members of staff having access to money, there is a high risk of financial infidelity. Then, next is principle of causa proxima or nearest cause. Proximate cause is concerned with how the actual loss or damage happened to insured party and whether it is a result of an insured peril. Pag sinabing peril is, it is a serious or immediate danger. For example is, act, looks like a risk. It it looks for what is the reason behind the loss. Is that an insured peril or not? Mm. Okay.
So let's proceed now with the next topic. So our next topic is the types of insurance. So there are two types of insurance, and these are general insurance or non-life insurance and life insurance. So let's have first discuss the general insurance. General insurance is a contracts that do not come under the ambit of life insurance are called general insurance. The different forms of general insurance are fire, marine, motor, accident, and other miscellaneous non-life insurance. So actually, when you say general insurance, everything apart from life can be insured under general insurance. It offers financial compensation on any loss other than death. General insurance covers the loss or damages caused to all the assets and liabilities. And like what I said earlier, general insurance is also known as non-life insurance since it's only focused to the loss and the damages caused from fire, marine, motor accident, and any non-life insurance. So actually, I'm just going to discuss the introduction about general insurance and life insurance. So later on, my members will also discuss the types of both insurance. Next is the life insurance. So what is life insurance? Life insurance is a contract between an insurance policyholder and an insurance company where the insurer promises to pay a sum of money in exchange for a premium upon the death of an insured person or after a set period. So, a while ago, Mr. J actually discussed what is premium, and premium is just like the benefits that we gain when we are part of the insurance company, or if we are given a chance to be part of insurance policy holder. Next, where the insurer agrees to reimburse the occurrence of the insured individual's death or the other events such as terminal illness or critical illness. So specific exclusions are often written in the contract to limit the liability of the insurer. So actually, there is a boundary when in there is a boundary about the life insurance, which it's just about the illness or about death, but it has limit where fraud, war, or suicide is actually not covered by of life insurance. So let's have the benefits of life insurance and the general insurance. So before we have the benefits of life insurance, let me explain first this. So we have here the 28,000. 28,000 is actually the average number of days a person lives. So if we are going to get the equivalent of 28,000 days into years, we will get 71.76 years. So now we can assume that a person can live for 80 years. I'm actually divide 80 years into 4 parts, where 0 to 20 years, 21 to 40 years, 41 to 60 years, and 61 to 80 years. So let's discuss first the 0 to 20 years. 0 to 20 years is actually the part of a person where they are just playing and studying. They are just playing with their neighborhood, they are just playing with their friends, they are just playing with their family, and they are studying in order to achieve their goals and in order to achieve their dreams. The next years is 21 to 40 years. So 21 to 40 years is actually the years that you already hired at your very first job. And since you now have your job, you are now able to buy your own house. You are now able to buy your own first house and first car. And since you have now your house and car and financially stable, there are times of that you will have your partner and to have your own family also. Followed by 41 to 60 years, which it is actually the times that um, it has two scenario. The first scenario is you still pursuing your career. From what career do you have in your 21 to 40 years? But there are also times that you already change your career. And by changing that career, um, it can cause that you have your own business and you bought another house and car, not actually for yourselves, but actually for your children. So this is also the years that your children are already done with their study. The next years is 61 to 80 years. Actually, 61 to 80 years is the most important part of a human life or of a person lives. Because as you can see here in the presentation, there are two words, the retirement and no income. So the reason why 61 to 80 years is the most important because it is the time that you already retired to your profession. Ibig sabihin, wala ka ng trabaho. So, if wala kang trabaho, wala kang income. That's why, ano yung dapat mong gawin para mabuhay in that years. So, kung susumahin talaga natin, di ba, nag-start tayo sa 28,000 days. And kung kukunin natin yung 0 to 20 na years and yung 61 to 80 years, that's actually the time na hindi ka nagtatrabaho. So, kung kukunin natin siya in days, makukuha natin yung 14,000 days. So, kung 28,000 days minus 14,000 days, ang makukuha nating difference is 14,000 days din. Which is yung 14,000 days is yun yung time para ma-achieve mo pa yung goals mo. Ibig sabihin, kung nasa 40 years old ka na, konti na lang yung time mo para ma-achieve yung goal mo. And alam naman natin na sa pag-achieve ng goal is merong mga hadlang. Merong mga barrier tayong may encounter. And that is actually called as the 4 fears. So the 4 fears, the first fear is, what if I can't work before my age turns 60? So hindi ka na makakapagtrabaho, and that is because of your illness and disability. So alam naman natin na if you don't have your work, you don't have the money. Kaya nga meron tayong terms na no work, no pay policy. So kung may sakit ka, saan mo kukunin yung pera mo sa kukuha ng pera pambili ng gamot? Kung may disability ka, saan ka kukuha ng pambili? Saan ka kukuha ng pera para sa panggastos mo sa pang-araw-araw? Yan yung isa sa fears na meron yung mga tao. The second fear is, what if I don't reach the age of 60? What if hindi ka na umabot ng 60? Actually, meron tayong two scenario regarding about this. Pwedeng possible na, not possible, aabot ka nga ng 60, pero ang magiging problem mo naman here is your retirement. Meron naman is hindi ka nga aabot ng 60, pero ang magiging problema mo is yung mga taong naiiwan mo na nakadepende sa'yo. Especially if you are the breadwinner of the family. Do you think pag nawala ka, kaya nilang mabuhay? Do you think pag nawala ka, saan sila kukuha ng panggastos nila sa pang-araw-araw? That's actually the second fears. Then let's proceed with the third fears. The third fears is, how much do I need for my retirement? So if I'm going to ask you, magkano yung kailangan mo kapag nag-retire ka para mabuhay ka pa? Kasi di ba pag retirement, wala ka ng trabaho, wala ka ng income. So dapat may ipon ka. That's why retirement is the longest holiday of our life. So according to study, the cost of living doubles every 10 years. So here in the table, as you can see, kung ikaw ay 30 years old, gumagastos ka sa monthly ng 20,000. Therefore, pag nag-40 ka, yung magiging gastos mo is 40,000 na. Pag nag-50 ka, 80,000 na. Then pag nag-60 ka, 160,000 na yung gagastos mo. What if nag-70 ka pa, nag-80 ka pa? So do you think, magkano yung kakailanganin mo kapag nag-retired ka? Do you think 500,000 is enough? 1 million is enough? Or 2 million is enough for your retirement? That's actually the third fears. Now, for the fourth tier, the question is, how can I ensure my child's good future? And the only answer about this is the education. Yes, kaya nga we have the term that we should invest to the education of our children. Kasi sinasabi nga nila na education is the key. Ito yung susi para sa magandang kinabukasan ng kabataan. That is the four peers of the person of the person. So, but we have the solution for those four fears. The first one is if you get sick or disabled, life insurance will take care of your future expenses. If you can reach 60, life insurance will take care of your family. And if you reach 60, life insurance can give you a lump sum that you can use for your retirement. And for lastly is for your child's education. Life insurance will provide money for their tuition. That is the introduction about life insurance and general insurance. So let's proceed now with the next topic, which is the types of life insurance to be discussed by Ms. Ana Marie Cueco.
Thank you for that wonderful introduction, Ms. Mark Kenneth Quinto. So let's proceed now with the types of life insurance. So, okay, how many types do we have there in our life insurance? We have two types. First is the term insurance, and then the other one is the endowment plan. Okay, next. Okay, what is term insurance? It says here, it is a pure insurance form. It pays your nominee the sum assured in case of your demise within the policy term. And it does not have any sum assured or maturity amount. Premium is very low. So now we have this question of how term life insurance works based on a particular death benefit. Term life insurance, which is sometimes referred as pure life insurance, as like what's stated there in the PowerPoint, it ensures a payment of a death benefit if the policyholder dies within a specific term. If the agreed upon terms expires, the policyholder can have the option of renewing the policy to a whole life insurance that does not expire. The policyholder can also let the coverage expire, which would mean that they will not be covered anymore and that the insurance is terminated. Term life insurance is very suitable for young parents. Why? Who may be eligible for a large amount of coverage for a reasonably low cost. Okay? Term life insurance is also suitable for those people who want temporary life insurance and do not want to commit their entire life paying high premiums. You already know what the premiums is about because it was discussed earlier by the previous reporter. The premiums you pay for the term life insurance are mainly based on the value of the policy, which is also known as the payout amount or the death benefit that you can get if you pass away. Okay? Other factors directly influence premiums, such as age, your gender, and the health. That is why the insurance company requires a medical exam before providing you the full coverage of the life insurance that you were applying for. The insurance company may also request some information about your driving records, your current medication, smoking status, your occupation, your hobbies, and also your family history. Factors that are not directly related to the insured party, such as the interest rates, the financial of the insurance company, and the state regulations also affect the number of premiums paid. Okay? The premiums paid for term life insurance are lower than other types of life insurances, since it only provides the death benefit that would be in addition to the fact that most term life insurance policies expire before paying the death benefit, so that the overall risk to the insurance company is lower than a whole life insurance. Okay, To get the sense of that, let me give you an example. So we have here an example. There is a 30-year-old healthy man who does not smoke, and he wanted to buy an insurance of a 20-year term. 20-year term of an insurance policy that provides a death benefit of 13,265,000. That would typically between the ranges that he needs to pay in a month is from 1,061.20 pesos or until 1,591.80 pesos per month. Okay, this is the considered very cheap when compared to a whole life insurance, which would require the same person or the man who is 30 years old and who do not smoke. If he would apply for a whole life insurance, he needs to pay monthly ranging from 10,612 to 15,918 per month to get his permanent coverage. If you die during the agreed term of the insurance, the company will pay the death benefit, otherwise known as the face value of the policy, to your beneficiaries. Okay, this is important. You need to remember this. The beneficiaries of the policy can be a person, people, business, or any non-profit organization that gets the death benefit if ever that you pass away. They can get the sum amount of the money that you get through your life insurance. This is non-taxable. Death benefit may be used by the beneficiaries to settle any outstanding consumer of healthcare debts, you have funeral costs, or even pay off all those mortgage debts that you have. You need to make sure that your family members know about your term policy and who they need to contact if ever that in case that you pass away and you have your life insurance, so that they can access the death benefit available to them. The death benefit may remain unclaimed if your beneficiaries do not have clear instruction on accessing the money available to them. Okay, nonetheless, if you die while the term insurance had finished, there will be no payout for the beneficiaries, of course. The term life policy have no value other than the guaranteed death benefit. Term life insurance comes with these several flavors, including the convertible, the increasing, mortgage, and also the annual renewable. Okay, we're going to talk about that one by one. First is that what is the convertible term? Okay, it allows the term insurance policy, which typically has a limited numbers of years, to be converted to a whole life insurance before it would expire. It does not require the policyholder to do a medical exam, just like what we said earlier, because you need, if ever you apply for a life insurance, you need to do the medical exam first. But in this case, you do not need to do that anymore, because even if you have any health condition, you can get these insurances when the term policy is converted in the typical term life policy. The insurance company would refuse or renew your coverage at the end of the policy term if the policyholder develop the serious illness. Okay. Next is that increasing term. What is increasing term? It is allow the increase of death benefit as time goes forward. Okay, the premiums do increase with increasing the death benefit. So it's like this: if your premium increases, your death benefits also increases. It's like that because it is the increasing term, of course. And then premiums early in life, when they have a lot of bills and expenses, they increase it when they have a better financial standing. And other benefit of an increased term is that the policyholder does not need to qualify for another policy at an older age to get the higher death benefit. The mortgage term, which is sometimes referred to as the decreasing term, is the exact opposite of the increasing term. Okay, it does not, in a way, that the death benefit amount decreases over time, because it's decreasing. Okay, earlier it's like if the premium increases, your death benefit increases. Now it is the exact opposite. Everything decreases. Okay, this is too much of that benefit with the decrease of the policyholder outstanding mortgage amount. The idea is that you don't need as much life insurance if you have less mortgage debt. But the word decreasing may deceive some people as the premiums are smaller than the normal term insurance, but do remain constant over the entire term, even as the death benefits decline. Okay. The last type is the annual renewable. What is annual renewable? Which each year it renews your term or renews your insurances with a higher premium since the policyholder is a year older. The main benefit of annual renewable is that the coverage is guaranteed to be approved early or every year. But clearly, this may not be financially suitable option for everyone because you need to renew every year, and every year it would increase and increase since you get older. Just, you know, since the premium do increases with every year of your renewal. Once you have chosen the most suitable insurance option for you can now apply or you can now decide which life insurance you would want to purchase. Okay, next is that is the endowment plan. Okay, what is endowment plans? These are insurance and investment plan. A certain portion of the premium is paid for protection of the life and rest amount is invested in low risk debt instruments. So at the time of maturity, the injured person gets a predefined amount. It also says that pays the full sum assured to the beneficiaries if the insured dies during the policy term or to the policyholder on maturity of the policy if he or she survives the term. Okay, this is how you would understand it better. Let's state it like this. Endowment plan is like acting your savings account whereby the policyholder will be able to decide on the amount that he wants to save up upfront. And he just need to save it over the period of time. And when it matures, you'll be able to get a maturity benefit. So it really depends on the kind of endowment plan that you're entering because there are different plans out there in the market that where you can purchase or where you can buy, whereby some only allows you to withdraw the maturity benefits when it matures, whereby as the new plans that are available in the market, you will be able to withdraw yearly income of the yearly benefit itself. So if ever you choose not to withdraw yearly income that you get in that life insurance plan, you do need to deposit it back or you can deposit it back and you'll be able to enjoy the compounding interest. We already know how compounding interest works and this is good because it multiplies every year. The maturity benefit of the yearly income, in this case from the endowment plan, will be able to help the policy owner to achieve different kinds of financial goals. Just like what the other reporter says earlier, you can achieve your financial goal if ever you purchase an insurance. It can be funding for your children's education. It could be funding for your own retirement plan, or even putting down for the first home down payment that you can have. So that is all for your type of insurances that we have. I hope that you learned something. And let me introduce to you our next reporter, which is Mr. John David Raet. He will discuss the type of general insurances.
Thank you, Ma'am Anna. So we're going to discuss about types of general insurance. First, we have health insurance. Second is travel insurance. Next is home insurance. And last is motor insurance. So let's proceed. So let's discuss about health insurance. It is indemnity plans plan that pays for hospitalization expenses up to the sum of insured, which means the indemnity, the health insurance will help us to cover up all our expenses. And then you can avail standalone health policy or floater plans which provide coverage for all member of the families. The health insurance help us not alone, but also help you and your family to coverage all the payment or all the expenses in hospital or in the hospitalization. I give you one fun fact. So the number one health insurance in the Philippines where that we have is Medicard. Medicard is one of the most popular in HMO that provide expenses and hospitalization using health insurance in the Philippines. Okay, we have travel insurance. In travel insurance, first, uh, protect against losses suffered due to lost baggage, delays in flight, and trip cancellation when you are traveling abroad. So in travel insurance, they protect or they protect all the lost baggages or your belongings and delayed flights, trip or cancellation in abroad. But in travel insurance, we have two basic insurance. We have vacation plan, which the vacation plan covers the coverage all the expenses if you have cancellation or if you have delays in flights. The vacation plans will help you to pay all the expenses. And then we have travel medic plans in travel insurance. It is coverage all the hospitalization, all the expenses in your medical. And it also offers cashless when you are being hospitalized during travel, which means, just as I said earlier, it is cashless medication. And next is, so we have home insurance. In home insurance, we protect your home and its belongings from the damages suffered due man-made or natural disaster. So in home insurance, they protect or they insured your belongings from damages such as man-made. We all know the man-made is terrorizing, war. The home insurance will cover all the insurance or the expenses and also the natural disaster, which are the typhoon, landslide, and floods. And also, some home insurance policy also provide coverage for temporary living expenses in case you are living on rent due your home on undergoing to renovation. So some or several home insurance will give you an and temporary living expenses. They give you expenses for your living temporarily, uh, undergoing for your renovation. So next is we have motor insurance. It covers overall insurance for your vehicles against the accidents, damage, theft, vandalism, and so on and so forth. So the motor insurance will the insure you from expenses such as accidents, sudden or damages, or also theft and vandalism. And also, this motor insurance has a two types of insurance, which is comprehensive and third party. So I will discuss what is comprehensive. So the comprehensive is the insurance where coverage all the pays and repair and replacement. While the third party insurance The third-party insurance is the insurance that cover or take cover for the third party, which means all the damages from the other person from your vehicle will be the motor or will be the third party. The third party will insure or um, will pay all the damages from the other person or the someone who damaged your car. So next is, so the difference of line insurance and general insurance shall discuss by Ma'am Roslyn Escares.
Okay, now let's talk about difference of life and general insurance, wherein both life and insurance and general insurance policies help in fulfilling your financial goals. In the life insurance, it aims to provide coverage to you and your loved ones, while in general insurance, safeguards health and valuables against unpredictable situations. So, we will tackle the difference of life and general insurance in terms of form, term, premium insurance, insurance claim, insurable interest, and lastly, the policy value in insurance. The first one is the form. In life insurance, it is not a contract of indemnity. It can be considered as an investment, wherein you invest for the future of your loved ones if ever you will die in the future. For example, there are many insurance company that um, provide an investment of life insurance where you can join, like for example, the Sun Life Insurance, ProLife UK, and many more. And if you invest in this kind of insurance company, the futures of your loved ones um, will be they have secured futures if ever that you will die. While in general insurance it is only a contract of indemnity, which is indemnity contract is a comprehensive form of insurance compensation for damages or loss. Your for example, your motor have general insurance. Yung motor mo, kinuha mo ng general insurance sa company na binilhan mo nung motor, then the company itself can give the damages, can give you back the damages or the loss if ever yung motor mo is nanakaw, nagkaroon ng sira, or yung nagkaroon ng banggaan, then nagkaroon ng damages yung motor mo. So the damages of your property can give back to you by the general insurance. Next one is term, or what we call is the term of the contract. The one major distinction between the two is the duration of the policies. First, in life insurance, it is a long-term insurance or plans that requires the policyholders to either pay a lump of sum premium or regular monthly, quarterly, or yearly premiums for a significant amount of time. For examples, you join the ProLife UK. It depends on you, the insurer, if you want to join for how many years. Like for example, you want to join for 15 years to 20 years of investment, or even you want to join for a lifetime that you are living in this world. So once na natapos yung term na napili mo, kung 15 years to 20 years or so more, or lifetime, the beneficiary can get the investments that you save in the insurance company if you die. While in general insurance, it is a short-term insurance. It is paid at once either when the policy is bought or when it is renewed. This may differ in case of a travel insurance plan, where a person pays premium only while buying insurance for a specific trip. So, in general insurance, it is short-term. For example, bumili ka ng, katulad ng sinabi ko, bumili ka ng motor, every year, dapat yung insurance ng motor mo, inire-renew mo yun. Because nasa contract yun na kapag every year dapat dapat nire-renew mo yung insurance niya. Kasi kapag hindi mo siya na renew, and ibig sabihin no, mawawala yung insurance na ng motor mo. Kahit na nung mga nakaraang taon ay ini-insurance, binibigyan mo na insurance yung motor mo, pero once na tumigil ka, ibig sabihin, tumigil na din yung insurance ng motor mo. If ever na nagkaroon ng aksidente, hindi na yung magiging pananagutan ng insurance company na napili mo. Next. Next is premium. In life insurance, premium has to be paid over the year. It paid at regular intervals like monthly, quarterly, or yearly. It is fixed and based on the cover amount that the policyholder chooses. So sa life insurance, sa premium, the insurers are the one who choose if gusto niyang magbayad ng investment for monthly, kung gusto niya is quarterly or yearly. Kailangan if sasali ka sa life insurance, kailangan alam mo kung magkano yung kaya mong ibigay every month or every quarterly or every year sa investment na gusto mo. For example, gusto mo ng kaya mong ibigay yung 2 months every month. So, kaya mong i-invest yon every month. Then, yung ini-invest mong yon, it may be increased every year of your investment. Hanggang sa mamatay ka or nagkaroon ng aksidente, kung ano mang event na maaaring mangyari sa'yo. While in general insurance, premium has to be paid a lump of sum. It is paid at once either when the policy is bought or when it is renewed. So, sa general insurance, sa premium, meron kami nabayaran na exact na babayaran sa premium. Katulad ng, kunwari, nag-travel ka sa isang lugar, bumili ka ng insurance na kapag na-aksidente ka, ibig sabihin nun, nagbayad ka, yung binayad mo, kung magkano yung binayad mo sa insurance na binili mo, ito yung maaaring ibigay sa'yo ng insurance company dun sa mga magiging beneficiaries mo. Next. Insurance claim. Insurance claim, it is a formal request by a policyholder to an insurance company for coverage or compensation for a covered loss or policy event. In life insurance, insurance claim is insurable amount is paid either on the occurrence of the event or on maturity. For example, kapag namatay ka, yung mga beneficiaries mo na napili, like your asawa mo, like ng mga anak mo, or any relative na meron ka, na beneficiaries sa life insurance mo, pwede nilang i-present sa insurance company mo na napili yung mga death certificate mo, medical certificate na maaaring pwede nilang magamit para sa pag-claim ng insurance claim nila. While in general insurance, loss is reimbursed or liability will be repaid on the occurrence of a certain event. For example, on what happened on Star Mall, Alabang, nasunog yung Star Mall, then, for example lang yan so, alam natin na mga mall, yung mga mall na yan, they are insured. So, whatever happens to the mall, pwedeng ibalik yun ng mga insurance company. Basta the thing is insured. Kahit magkano pa man yung magastos magastos mo, kahit magkano man yung pagpapagawa mo, ibabalik yun ng insurance company. Kasi insured yung yun yung kagandahan kapag insured yung mga bagay na meron ka. Pag in-insured mo yun in general insurance, kahit magkano man yung magastos mo, ibabalik lang yun sa'yo ng buo. At pwedeng bumalik ng mas maganda pa kung gustuhin mo yung mga bagay na nasira. Next is insurable interest. Insurable interest means, in simple terms, that someone would experience financial hardship upon your death. For example, life insurance must be present at the time of the contract. Ito yung mamimili ka ng mga magiging beneficiaries mo sa life insurance. Kung gusto mo kung may asawa ka, syempre sila yung magiging mga insurable interest mo. Yung children mo, and kung wala ka mang spouse or children, yung relatives mo. Then, yung mga magiging interest or investment na nabigay mo sa insurance company, yung mga beneficiary mo kapag namatay ka, makukuha nila yun ng buong-buo para kunwari, katulad doon sa children mo, meron na agad silang magagamit para sa pag-aaral nila. Meron sila magagamit para sa mga gusto nilang bilhin, like pananamit or whatsoever. May magagamit sila para sa pagkain. Meron sila magagamit na panggastos sa araw-araw. While in general insurance must be present at the time of the cost of contract and loss. For example, yung bahay mo na sunog. So, kailangan kapag sa insurable interest, yung general insurance na meron ng bahay mo, kailangan, kunwari nasunog yung bahay mo, so dapat ipapakita mo dun sa insurance company na sinalihan mo kung ano yung dahilan ng pagkasunog ng bahay mo, kung ano yung mga nasira, kung ano yung mga nawala, at kung ano yung mga basta yung mga nawala sa bahay mo. So, pwedeng ibabalik nila yon, i-renew nila yon, and ibabalik nila ng buong-buo yung bahay mo. Bibigay nila yung mga, kung magkano yung magagastos, at kung magkano yung na-insured mo sa bahay mo. Next. Last one is the policy value. In life insurance, it can be done for any value based on the premium policy. It depends on the preference of the policyholder. One can fix the sum assured depending on the requirements of his or her family and the ability to pay premiums. The sum assured is then paid back to the policyholder on maturity or the nominee in case of the unfortunate events. So sa policy value, tinatanong, kapag sasali ka sa mga insurance company, tinatanong nila kung ano yung mga work mo, kung ano yung ginagawa mo sa buhay, kung ano yung ginagawa mo araw-araw. So, kunwari, teacher ka, then you have a monthly salary for 20,000 and up. So, pwede kang mag-invest sa kanila ng mga kung gusto mo 2,000, kung ano yung alam mo sa sarili mo na kakayanin mo magbayad for every month or quarterly or yearly na mapipili mo sa pagsali sa insurance company. While in general insurance, the amount payable under the life insurance is confined of the actual loss suffered. It is influenced by the value of the asset. The policy value in this case is based on the damage suffered and not on the sum assumed. Katulad nga ng sinabi ko sa kanina, yung sa bahay na nasunog, pero dito sa policy value, kung magkano lang yung kung magkano lang yung nawala, kung magkano lang yung na-damage, kung ilan lang yung nag-damage, yun lang yung ibabalik sa iyo ng insurance company. Hindi yung assured na, hindi yung sum na assured, yung inassured ng insurance company. Next, if you don't have any questions about the difference about the insurance and the two types of insurance, which is the general insurance and life insurance, we have activity for the week, which is what we call let's reflect. The instruction is, by the end of the discussion, you will need to create a short reflection by answering the questions. And the question is, what do you think is the importance of life insurance and general insurance in our life? So before the discussions may end, let's quote that in case you can't be there to catch, then make sure to leave a safety net for your loved ones. And also, getting insurance is your responsibility to your family and loved ones. You may hate it, but it is your responsibility. Hindi porket may life plan excited na mamatay, pero pwedeng gusto lang maging handa. And that's all. Thank you.